Wall Street, what are they doing with this conversation? Well, a lot of smart folks this morning woke up, saw the gap higher open and said, you know what, I'm short. I don't believe this rally. Other folks think that the bottom was put in yesterday when we turned off of that down 343 and the financials led us all the way back. On call today, Ned Riley, CEO of Riley Asset Management, and our good friend Peter Schiff, president of Euro-Pacific Capital. Hello, Peter, and author of Crash Proof: How to Problem. This is Peter and Ned are here for the hour. I promise you don't. This is one you don't want to miss. Ned, your tendency has been historically towards optimism. You've been an optimist by your nature. How do you interpret the reversal yesterday, middle of the day, and the incremental move higher this morning, but subsequent deterioration basically since the open?
Well, I clearly am happy about the events, but they got to the issue just before, and that is basically this is not the panacea for the problems that are in this economy or market. I am very optimistic long term, but the problem we still have is a systemic growth problem. We've taken the housing market out of the equation for the consumer. Values have fallen, and the Fed should be more continuous in this easing process. I think that's the great anxiety right now, that the Fed may just inject this little bit of stimulus in, but then they will back away again because they fear inflation. I think growth is the issue to watch in the next 12 months, and the Fed needs to recognize that the housing industry, the collapse, durable spending down is the key issue. Inflation will fall, but I'm afraid that if they let the economy go too far on the downside, they can't rectify the problem.
Peter, what are you thinking?
Look, there's nothing the Fed can do about this. They can't protect the markets. They can't stop the economy from collapsing. It's going to happen. They made the bet, unfortunately, under Greenspan. We're all going to have to lie in it. There's nothing they can do. You know, this move today is more like a trial balloon. I mean, Bernanke would love to cut the Fed funds rate, but he knows that the dollar will collapse if he does that. He knows interest rates are going to take off. I think he's launched this trial balloon. You can look at the reaction of the Treasuries. Bonds are under pressure. The dollar's under pressure. Bernanke knows the economy is going into a recession, but he can't tell the truth. He can't tell the truth about why he's not cutting rates. It's
Which
because of the
you
dollar.
say is to defend the dollar, Peter. Now, how do you interpret, Peter, yesterday's stock market, which was so notably different than the past days, if only because of the incredible strength in the financials, which we had not seen, and the incredible weakness in the global names? How do you interpret particularly the performance of the financials?
Well, I think the financials are, if they went up, it was short covered. And I think the financials are ticking time bombs. They're going a lot lower. There are huge losses. It's just like the home builders. I remember, a year ago, people were recommending these stocks because they were trading at low multiples. Well, their earnings vanished. The earnings for the financials are going to vanish.
And I guess to that end, and I hear what you're saying, how do you integrate those who would argue that subprime, Peter, is a relatively, that the lending component that presents the risk, which is subprime, is only 10 to 15%, and that while the default rate is ticked up, 80 to 90% of that will get paid off. How do you discount that?
Yeah, that's right. Remember, I predicted all this in advance, and it's not just subprime. It's the entire mortgage market. It's the prime loans.
But that's everybody. But do you honestly think, Peter, that everybody's not going to be able to pay their mortgage?
People that took out adjustable rate mortgages in the last few years are not going to be able to afford the resets. They don't have that kind of income. People max themselves out. They bought the biggest house they could afford, and a lot I have cashed out a lot of equity in the last few years.
Ned,
they can't afford these enormous mortgages.
Ned, what do you think about that?
Peter, in all due respect, I don't think everybody in the world speculated on the housing market.
Oh, yeah, go to California, go to Florida, go to Vegas.
Well, hang on,
Peter,
you got to let Ned talk too. Go ahead, Ned.
Peter, a year and a half ago, I was on CNBC, and I said, watch the real estate market because it's going to undermine this economy. So I'm not off your book. The only thing I'm saying is there's a much better financial situation out there. Corporations have one of the best balance sheets they've had in years. The banks are dealing with this crisis. If I said to you this was developing now, would you have said Bank of America would have upped their earnings estimate in that second quarter? No, you wouldn't have. They are dealing with this crisis, an issue. Let me finish on this one. Global growth is going to slow. The central banks are going to pump more liquidity into the system. There are going to be some defaults. There's no question about it. But the bottom line is we face a financial crisis every 8 to 10 years, and we always get this catastrophic scenario, the world is coming to an end. We had it in long-term capital mortgage and the rest.
Hold Peter, hold your fire. Ned, hold your fire. We've got you all hour. The conversation obviously off to a good start. Trish.
Thanks so much, Dillon. Well, the dollar, of course, struggling to make a comeback against the yen this morning. How is Asia's overnight sell-off and the yen's recent rally been impacting your overseas investments? A global investor tells us where in the world he'd be putting his money. Keep it right here on the call. No one helps you navigate these markets better than us. We're back in 2 minutes.